All right, we are live. So I'm here with Richard Brennan. So I've watched Richard's stuff for years. I've always been a fan of his work, the way he thinks trend following. I actually have a quote now on my wall sitting here staring at me, which is uncertainty is correlated with trend following. And I really like that because I think when the times are very uncertain and then you get the signals are the best signals.
Yeah.
Most people would say, I want to really marry the fundamentals and the technicals together, or the price action has to match the fundamentals, and that's the best trades. It's like, I don't think that's true at all. I think most of the time when I see the fundamentals are bad, not that I really trade on those, but when I see the fundamentals are really bad and we are living in uncertainty, like last year 2023, that was a lot of that, and we had a lot of breakouts and a lot of indices, and you're just buying them and the whole world's telling you that fundamentally that's a terrible trade.
Yeah.
And so I love that quote. I love all the work you do. So definitely, guys, make sure you're following Richard. He's also on Twitter. There's lots of podcasts out there. How you doing today, Rich?
Yeah, very good. Thanks, Jason. Here in Australia, it's our evening and your morning over there, but no, all good over here. Quite warm over here. Are you cold over there?
Uh, it changes day to day. So anybody who's in the United States knows Ohio and the Midwest is pretty much a ridiculous place to live, because you can go from we like last week we were at 70, 80-degree days. Yesterday was 30 and snowing. So, Fahrenheit.
Yeah,
So
big
as that
variation.
happens, you're kind of like sitting there going, what the heck is going on? But really, like, if you're in Ohio, you're just kind of used to it. It's the
Yeah.
lakes, something with the lake effect.
Okay.
So as you have
Yeah.
this lake effect up there, it kind of makes these weird tunnels where you get like major snows and then no snow. It's weird, but
Yeah.
we're going into spring right now, thankfully.
Yeah. And I suppose, yeah, we're sort of going from winter now. We only get in Queensland where I am. We don't get the four seasons. You're either summer or you're winter. You don't get the sort of autumn or the spring.
Yeah.
Where I am. So I'm in the more sort of subtropical sort of area of Australia, and yeah, hot or cold. That's it.
That's it. I mean, I loved when I visited there. I absolutely loved Australia. Like, more than anything, it was a beautiful place. The people are great. I got called. Maybe I can't say that because I'll get pulled off of something. But the C word every other day, and I was like, wait a minute, that's actually just that's just the way they talk to people. It's like an endearing term for
It
them.
is
you know?
term of endearment over here. You wouldn't believe it.
It's a term of endearment. So it's really cool to kind of see that. Just kind of, it's a shock to the system, though. So,
Yeah.
and also a lot of people in the States, they don't understand things like kangaroos are like our deer here. They're kind of
Yes.
everywhere. That, so they think like they're these cute, amazing things, and then you go over there and they're everywhere, and they, like, you run in, your car can run into them, just like here with deer in the United
That's
States. So
right.
it's really interesting. Not that I don't I love the deer here. I have no problem with either one of the animals. I love animals in general. I don't care, if they're crazy animals or not. But it's pretty interesting. It's a shock to the system. So how long have you always lived in Australia?
Yeah. So I was born in the very south of Australia in a place called Tasmania. So that's where I was born. I spent all of my childhood there until my teens, and then came up to Queensland from Tasmania looking for a bit of warmth because Tasmania gets pretty cold. It's a bit similar to New Zealand in a way that it's a little microcosm that's very similar to New Zealand in certain aspects. Not quite as picturesque. Certainly is pretty, but yeah, it's our cold zone. That's where all of our winemakers have slowly migrated as it's getting hotter on this continent, and they're all sort of moving down south into Tasmania, and you get the salmon farming and the good food and the quality food down there. So Tassie's the colder climate that's sort of attracting a lot of the winemakers and the grape growers and the apple growers, that sort of stuff. So
Nice.
while the rest of the continent is slowly getting more and more barren.
Yeah, yeah. I mean, it's an interesting world at the moment because you kind of watch it and you kind of see it in forecasts for grain prices. Like it's not what I trade on, but I certainly read them, and just kind of you see it in all these different areas. So it's kind of interesting. So I guess there's a there's a question that I wanted to ask you, and it's a different question that I don't know if you've ever been asked, but I was wondering, you think trading in such a deep manner and trend following and price action. How do you learn to learn things for yourself? Like it's a good question because I think generally we all wonder like how to learn things at a deeper level to the point where you really understand it deeply and how to learn things quickly. And like I feel like you have a knack for learning things. And some people use certain methodologies. Like I learned a methodology years ago using like the trivium method. I'm just wondering, where did you learn the way you learn?
Look, it comes from the fact that I gave a challenge for myself about 15 or 20 years ago where I decided to get heavily into science, quite extremely, and devouring all of the books I could. Now, I never had the formal academic training to sort of understand a lot of the more advanced concepts, particularly in physics and things like that. So what I did was I threw myself into the books and almost in a force reading type of style. So I'd pick up a difficult book and I'd force myself to go through it, even though I didn't understand a large component of it. So I'd go through it once, then I'd go through it again, and I'd go through it again. Then I'd read another book, then I'd come back to that book. And basically, it was a style of piecing together fragments of knowledge as I picked them up until the more and more I got sort of confident, the more and more I learnt, I was able to sort of piece together more and more of the fragments. So learning to me is something that it's essential to get coherence in your understanding of something. So there's knowledge which is just facts, but there's understanding which I think is critical, which is um, getting to the deeper level of putting together facts in a way that you can understand it and in a way that you can transcribe it to, say, a child or something, or someone who's got no familiarity with the topic without speaking the jargon, without speaking all of that thing. So doing it in a simple way, often using analogies with other things that the other person can understand to get them to, well, jointly to sort of grow together in understanding and awareness of what you're dealing with. So a lot of my learning is through analogies. When I came into the financial markets, I had a fairly heavy background in complex adaptive systems. And so what I was doing was continuously assessing the financial markets and then assessing other complex adaptive systems and seeing commonalities that existed between these often what appeared to be very disparate systems. There was often a lot of common underpinnings to all of them, and that therefore enabled me to adopt an approach I was comfortable with because obviously with trading and investing you need to understand what you're doing, and at least have a philosophy on how you think markets behave. It's your model of how you think it works, and then with that model in mind, then it's a case of validating that model, validating it. That's how I'd approach things.
Interesting. Hey, Rich, can you bring your microphone a little bit closer to you?
Yeah, sure, Jason.
Okay, yep. Thank you. But so I think it's interesting the way you said it because I think generally, one, I have a ADD brain in general. I'm also dyslexic. To learn things, I do a very similar thing where if I'm just staring at the problem, directly at the problem, I can't understand the problem. I can't fix the problem. I can't go around the problem. I'm stuck with the problem. But like you said, like sometimes you're reading something and then you'll pick up something else and read it. And then going back, it changes the way you look at things. And I think that's a really important point that you bring up, because I think generally normal people, like the way that we're taught to learn, even it's not that how we learn, it's how we're taught to learn, is that we think of everything as a straight road, and really learning is curved. It's a circle sometimes. It's
That's right.
it's maddening at times. And really it's with anything in sports. If you continue to try the same thing over and over again, I was a bike rider, and when I would try the same thing over and over again and never move on, I would get stuck at doing the same thing wrong over and over and over again. But when I would go to try something else and come back to it maybe a week or a month later and just give up on it for a week and come back, I would have a fresh set of ideas, a different mind coming into it, and I wouldn't continue to make the same mistakes over and over again. I think that's also important in trading, because I think a lot of traders, when they're having bad periods or they're struggling, however you're trading, if you're built, you can do this systematically. You can build a system and not run it well. Like that happens more than anything. And so when you're doing those things, I think it's important to be able to take that step back, get out of it in general, and maybe take a break from trading. I know that, and you know this too, when you look at a back test and it says like, hey, these breaks from trading will actually hurt your returns. However, I think mentally, sometimes you might need it. I do it from time to time. It's very rare these days, but in the beginning, I think it was very important for me to come back, be fresh, because I'm the person who has to click the button still.
That's right. That's right. I've found, Jace, that one of the big things for me is I have sort of run quite a few small business operations, and tell me if this happens to you. I often did a bit of consulting for small business enterprises, where I come in, I'd look at their business from a fresh set of eyes, identify what I think are problems, with that business, and then develop plans to how to solve some of the problems. But for someone working in the organization who might have been working there for many, many years, they tend to they get a myopic mindset. And this happens with trading as well. When you're staring at the screen, staring at your strategies, you get this myopic focus that prevents you from seeing anything outside your particular focus. And often I find that I'd recommend that if you were struggling with your trading, were having a difficult time, it's often best to just stop and take a totally different direction. Do a bit of reading, go out into the garden, have a look at your garden, do things that aren't necessarily related to what you're doing. But when you're doing that, always keep in mind what you are doing, because you'll start seeing these associations. You'll start seeing things that happen in the garden, happen elsewhere, happen in another system. And when you look at those opportunities in those other areas, you often find clues that then you can come back with a totally fresh set of eyes, and bang, you've fixed your problem. Because there's nothing worse than when you're sort of with that myopic focus, you get yourself in a rut where you can't see anything outside of that focus. And that's often very unhealthy in whatever you do. And that's just a tip that I find if ever I find myself getting into a rut, that's one of the things that I'll do. I'll deliberately change my mind. It's a process where I'm sort of rewiring my neurons, because the neurons, they get sort of into a particular concert when you're focused on a particular task. They're all working in unison together, and they're all sort of connecting in a particular way. What you need to do is go out and break that circuitry, come back and refix that circuitry so you can think a different way. And I find that very important.
Yes, I have a big smile on my face because I'm thinking about the the newsletter I put out yesterday. So my fiance ended up finding a queen bee. Now it's a yellow jacket. So like, you guys
I saw that wasp.
Yeah,
Yes.
Yeah. So years ago, I was terrified of them. I have been stung many times. I never knew why. I was always like, they just hate everything, and that's just the way they are. And then probably like 3 years ago, and I've never like been a person, like I've always liked bees, but honeybees, bumblebees, the yellow jackets, I just stay away from. Last year, I'm in the garden, like you said. I start to really pay more attention to these things. I'm looking at this mud dauber wasp that would come to my yard every day. It's a huge, one of those really gnarly looking ones. They got like their bodies are all skinny, they're huge. And this thing never even looked at me, twice, like it just never even cared. I was there, and it would hang out and it'd terrify me. I'd be scared to death about it. But at the same time, like I would be sitting right next to it, and then I started getting interested, and then I started reading about it, and then I started reading about wasps in general. I find that wasps are very intelligent. They can read faces, and I'm like, that's crazy. They can't read faces. And then I'm in the yard, and then the same wasp would come find me when I would be watering, and it would follow me around. It would like sit on a leaf right next to my head. It would do, and I was like, what the hell is this thing doing? Finally, like one day I just sprayed a little bit of water on the ground. The wasp came and drank the water off the ground. And so like it was, for me, that was a huge like shift of going, okay, well, these things do not care about me. Why not? So I learn about them. Oh, when they're out foraging, they actually don't care about humans at all. Like the only time they're fighting, and this kind of like I'm also giving away that I'm a very sensitive person on this in this part of it. But I'm also I learned that the wasps in general, mainly all wasps, the only ones that survive the winter are the queens. That's it. And so all of them die. Their brothers and sisters die. And I was kind of like sad about it. I was like, man, I kind of feel bad for these yellow jackets and wasps at this point. So I learned that, if you put something in your backyard, like basically the end of the season, because they're all dying, that's when they're aggressive. They're looking for food. They're starving. They're going to come at you to try to get your food or whatever because they haven't eaten. So I take a little thing of water. It's a dish for bee water, actually, honeybees, bumblebees, wasps, whatever. And I put a little bit of sugar in it, and I put it at the back of my yard. And these things would go right to it, and they wouldn't pay me any attention. And like, they literally stopped being aggressive. They would just hang out. And
Yeah.
I was kind of blown away. And then in the summer, like I was actually like, it's funny because once again, I'm giving away how sensitive I am. I'm sitting outside, doing my flowers for the year and stuff. Yeah. I also grow flowers and food in the backyard. And so I'm putting all the seeds down, and I'm wondering where the queen wasp is, because I'm seeing some of the other ones recently. And I'm like, I wonder where the queen yellow jacket is. And then my fiance finds this thing in the front yard. I take it in. They take a picture of it, and I obviously posted it everywhere. And people were.
I saw the picture of it. Is it big? It looks quite big.
It's not big. I'm just very close to it in the picture. So it's a queen yellow jacket, so it's moderately big. But I would see this one in my yard all the time. You can actually tell the queens because of the way they're colored and the dots on them. And so I'd see this one in my yard all the time, and like I was kind of like wondering where it was, and then she finds it. And then I make a post, and like people, like I got messages written to me about the bee and stuff. And it's like, but my main point is in the newsletter, I talked about how I changed my mindset on bees and yellow jackets in general, like how I just went from being terrified to being okay. And I think that's really pertains to trading, because there's a point as traders where all of us kind of have to change our mindset. Like you go from a losing trader to a winning trader. And how do you do that? And if you can't change, and there's a great book, and you may have read it, Man's Search for Meaning. Have you ever heard of that book?
No, I haven't. Nope.
So it's the quote is by, or the book is by Viktor Frankl. And I quoted him, and I always love this quote. Basically, the backstory on Viktor Frankl is he was a psychologist before not the Nazis took over Germany. He got thrown in a concentration camp, and then when he was in the concentration camp, he kind of writes about how he has to handle it, what he has to do.
Don't forget to take out your trash cans.
Of course, I have that.
There's a reminder.
Yeah, that's my reminder. Okay, and I'll forget if I don't. But anyways, so Viktor Frankl, he's in the concentration camp, and he talks about his experience in the concentration camp. And he writes, here's a quote from him: "Everything can be taken from a man, but one thing, the last of human freedoms, to choose one's attitude in any given set of circumstances, to choose one's own way." You know, that's really, like, to me, what signifies, like, you know, trading in general is, like, you have to really choose the way you look at losses. You know, like, you're gonna deal with losers. How do you look at them? Are you looking at them like it's the end of the world? As a new trader, you think these people, you know, are very, like, people like us, we're very smart, we get every trade right. It's just not true. We're just good at losing. You know, I'm very good at taking my loss and looking at it in a way that it just doesn't matter. It's one of, you know, 100 trades. Out of 100 trades, I'll get 40 of them right, and some are going to be outliers, and I'm going to be just fine. You know, like, that's how I look at trading. And some years the win rate's higher, some years the win rate's a little bit lower, like, you know, but in general, I understand that. And so it's the same as, like, you know, understanding win rates and all that. So I guess the next question is, as you've been going through this journey, what's kind of a big moment for you where you kind of were like, okay, I kind of get this, I'm kind of understanding where I was going wrong, and kind of shifted your mindset and became a better trader because of it?
Probably it took about 15 years to realize that, to stop chasing returns. So I'd always treat trading or investing as something where you've got to find the best strategy, the best model, something that um, works most of the time, etc. Um, so what really stunned me was that, with the particular method that I do, which is this diversified systematic trend following, the systems themselves are only part of the solution. They basically extract this weak edge from the market, but they're not doing it in a way that's going to excite anybody. If anyone saw my individual strategies, they'd say, you know, what dogs they were. They're certainly not exciting in isolation, but when they're all put together in the portfolio, that's where the heavy lifting is done. How they all work as an ensemble together. And that was one of the big breakthrough moments for me, because prior to that, my focus was always towards the profit or the expectancy side of the equation. It's when I was able to take my foot off the accelerator there that I realized that I didn't actually have to, um, identify the best models. That therefore allowed me to shift focus to, hold on, let's don't develop the best models. Let's look at the less overfit models, the simpler models. When I started taking that approach, things got immensely easier. And Also, the decreasing of bet size because of extreme diversification sort of takes your focus away from individual trades, and starts making you focus towards, the next 1,000 trades as opposed to each individual trade. That was another key sort of part of my story, and what sort of gave me the aha moments was realizing, um, with diversification, with very simple systems, not overfit systems, not complex systems, not systems trying to hit it out of the park all the time. It's these very, simple systems, that what I call loose pants systems, gives a lot of freedom for price to move within. That therefore meant that I was not overfitting my models to the back test or to history, and allowing freedom for movement, so I could really start focusing on the game changers in my particular investment world, which is these outliers. So If before I got into this world of outliers, let's say I was interested in trading a few stocks, or interested in trading a few systems on CFDs, or interested in trading a few systems on futures. Because I was only engaging a few systems, it was encouraging me to overtrade those systems, because I was basically not optimally allocating my capital, because I only had a few systems. So, I get up in the morning and think, why aren't I trading? Why aren't I trading every minute of the day? That I tended to find that all of the bad habits started arising from the fact that I was using too few systems, and that was therefore encouraging me to always think that there are opportunities available in the market. But then when you step back and you think, well, how do these markets really behave? You realize that there is no enduring edge at all moments of time in these financial markets. Markets ebb and flow. There are periods of time where you get very low volatility in markets and not much is happening. But then there'll be these moments in time where you get these significant shifts in market price. And so you recognize that when you observe these markets and you look at other systems as well, there isn't this continual edge to be extracted from them. You've got to wait for these opportunities to arrive. And so with that sort of mindset and with these simple systems, I started thinking, righto, let's have a look at these complex adaptive systems. What's common to all of them? And common to all of these complex adaptive systems is this what I call tail behavior. There are moments in time which can't be predicted in advance, where markets exhibit almost chaotic properties. And in those moments in time, that's where predictive modelers tend to come undone, because they've trained their back tests on very stable environments, predictable regimes. They're not, they haven't sort of trained their models over these more chaotic environments that occur from time to time. So there are risk events waiting to happen for those particular type of what I call predictive modelers. So, with the bulk of traders in this world being predictive modelers, because everyone wants to find the best patterns, everyone wants to use the back test to get the best system. Most traders are looking for the most frequent occurrence. I'm looking for the extreme occurrence, and those things, because they can't be predicted in advance, they blindside you. So they are what I call the game changers of this business, because they either blow you up, or they are the windfalls that you could never have explained away. Something like cocoa that I'm writing at the moment. It was through no sort of predictive logic that I was on cocoa. It's just that I had a diversified trend following system, and one of my markets was cocoa. Now I'm enjoying the benefits of what cocoa is delivering. And that's through a hands-off policy. No hands, mum. I didn't predict this. I just have a process that extracts this weak edge from the market, exploits outliers, has these very diversified systems that's in lots of different places at lots of different times. So, it's that expression, Jason, where they say, "Oh, you're lucky." Well, if you understand what luck is being in the right place and at the right time. That's what luck is. So there is a process you can do to be lucky, and that's diversification, being in the right place. So in other words, it's not through your choice that you've chosen a market. It's because you're very widely diversified that you are likely to be in that particular market. So that's being in the right place. Being in the right time means a systematic model that's on all the time, even when you're, mucking around and, having a sleep. There's a model working in the background always there. So that's being in the right place at the right time. So that's a process that changes a luck statement into an actual process. So that's why I'm on cocoa. That's why I'm on Bitcoin. When these trends emerge, provided you are diversified widely, very small bets allocated to any individual market. And the reason you're doing that is because you don't want any extreme risk exposure being associated with one individual market. But you still can catch outliers, because if you traded 500 markets, which means that you might have to have very small bets to be able to trade 500 markets. if you reduce the bet size on all your trades, that means that yes, everything is in scale is reduced. So that means your losses are reduced, but the outliers are still as monumental in the impact on your portfolio. It's just that your scale's been reduced. So you find that even though you've got very small bets, people are saying, well, how do you make any money with those very small bets? Well, cocoa represents about 25 to 30% of the unrealized equity of my entire portfolio at the moment. And that started from a tiny bet, from a small seed with an ensemble of systems, and slowly pyramided in effectively into that trade. So, this game that I'm in now, I'm so happy with, because it took me so many years to get there, Jason. And it was through stupidity, it was through hubris, it was through an ego, all of these things that you have to let go. And once you let them go, then you can start becoming a trader.
Yes. No, I love that, because that's the game, right? When we're looking at this and you're talking, I'm just listening. One, it's really fascinating the way you break things down. I can't articulate to the extent that you just did. I would say, like, you make your own luck, meaning getting the probabilities on your side. But you talking about it, the way, and I've also made that connection, but I probably, like, thinking about it, I probably heard you say something similar before about luck and putting yourself in positions to be lucky. Like, I feel like you've said that, and I probably heard that. So, I'm glad that gets through, because to me, that was something that was a really big moment for me to just understand, like, my goal as a trader isn't to get every trade right. My goal as a trader is to put the probabilities on my side, really. Like you said with cocoa, it's a great trade for us. Like, a lot of us trend followers, like I actually heard certain trend followers, and I was blown away by this. People took it out of their systems because it got so messy. They just stopped trying to trade it. And it's like, that's usually when these crazy outlier events happen. You start to give up on your system, you start to give up on your strategy, you start to give up on an asset, and the next thing you know, it just explodes in front of you. People always say to me, like, oh, you always catch all these trades. And it's like, no, I'm not catching all the good trades. I'm just putting myself in positions to catch all the good trades.
Yeah.
I trade like you do. We trade the futures markets. Futures markets, we have access to just about everything. However, I don't trade. I know some trend followers do trade individual stocks. I don't trade individual stocks. But having that focus on all of these different asset classes, commodities, which have these insane moves at times, up and down, you make money on the long side and the short side in the commodities market, especially. Bonds, we have access to bonds, we have access to crypto, we have access to just about everything. So because of that, we have lots of time where we get very lucky in trading, but it's not a thing, like you said, it's not a prediction. It's not a prediction.
That's right.
Mhm.
And if you could imagine, let's say that you came to this investing world and you were forced to select 5 markets. So you made your choice of 5 markets, and lo and behold, you find that there's a thing called cocoa and this thing called Bitcoin, with these amazing outlier opportunities. And because of your selection bias, effectively your 5 markets, you haven't participated in that outlier at all. So the whole principle of diversification is to identify uncorrelated markets or uncorrelated opportunities, and to diversify as widely as you possibly can. Because these outliers, we do know, when I look at the long-term market data, I do know that they're a universal phenomenon. These tail properties occur in every liquid market that I trade. I'm trading at about 67 of them at the moment. I'd like to be up where Jerry is with 300, 400 markets, but I don't have his capital. But I've got about 65 to 67 markets, trading 10 systems per market. So that gives me a lot of return streams. But all I'm trying to do there is I'm trying to avoid hindsight bias. I'm trying to avoid selection bias and give me the widest opportunity or the widest domain in which to capitalize on these events called outliers, or these anomalies, which are unpredictable. But I know that they occur. We never know when or where. That they're a bit like it's a bit like a surfboard rider, the big wave rider who sits out there beyond the breakers because he's not interested in the small swell. He's not interested in the normal waves. He's waiting for the king waves, the big waves. And he might be out there for a week. He might have a little tent on his beach. He's camping there because he knows that, 4 of the days that he's waiting there, he's not going to catch anything. He's just sitting out there waiting for that wave. But then just with his patience and endurance sitting out there, ultimately he knows these things happen. He's observed it before. So he just sits there patiently, and lo and behold, this unique wave comes, gives him the thrill of his. Have been spending a lot of time fluffing about on the small breaks and stuff, but there's no excitement to him. He wants this unique thrill of riding something that's never been seen before. And that's exactly how I treat these markets. I'm waiting for these outliers because these are what I call the game changers that, they might only represent, 5 to 10% of my total trade outcomes, these outliers. But they're the things that do all of the heavy lifting in my portfolio. 90% of the trades is what I call the pain arbitrage of waiting for these outliers.
Nice. Hey, Rich, can you take your mic, flip it a little bit toward you, like the top of it? Yep. Push it towards you. Yep. Perfect. Okay. It just
Right.
you cut out a little bit. I want to
Okay,
make sure everybody hears everything. This is but no, like I rode BMX bikes, so that was what I did. So understanding, like, for me, the ocean, the way things move, like that's generally how I think of trading. I think of it as, these outlier events being very cyclical, these things that you can't predict. And I also get a lot of people who will say things like, oh, well, I knew cocoa was going to be here. No, you didn't. Like, people will be like, there's a supply issue. It's like, no, yeah, there's supply issues. Sure, there's all types of stuff. I've seen supply issues all over these markets for years. They've talked about the cocoa wars and all this stuff going on for the last 5-10 years. This just happened to be the outlier event. You just don't really know, and once again, like, yeah, I know somebody could probably put an argument in on me. Well, yeah, I knew it's one of the only people I know who really trade those outlier events are people like us who are just running a system and walk away. Think about bonds going negative. Who was still long bonds when they went negative? It was just the trend followers, like, so, nobody in the world thought that bond prices were going to go negative at that time. That was a ridiculous thought. You weren't going to see it. And the trend followers were like, well, my system's long, so I'm going to stay long. And they capitalized from it. A lot of them capitalized and huge profits from things like that. So you really have to understand, as a trend trader, your goal is to catch those outlier events. And if you're hunting for those outliers, you will find them at some point. And then how do you stay in those outliers? Look at cocoa. People always want to talk about things being kind of easy. For example, you go, oh, if I just when you start trading, you think, if I bought Bitcoin in 2015 and just held it to today, I'd be fine. And really, like, there was 2, 3, 80% drawdowns in there. Like, there was a lot of volatility, a lot of pain. So you have to understand, how do you stay in those trades? So how do you set up your volatility so you can have enough space to let those trades run? How do you risk manage inside those trades? These are all very important things. So I guess for you, how would you explain how the price of something moves? Something like cocoa, let's say. How do you think of that? How do you set up your stop losses, trailing stops? And then when do you think of, like, an exit? How do you think of those things as a systematic trend follower?
So what I do is I have a single entry, a single stop, and a single trailing exit. The stop and the trailing exit, I'm using ATR as a volatility measure, basically, for the entry to determine what risk allocation I want to put onto that trade, and then I might risk, say, 0.25% of my what I call realized equity. That therefore says I've got X amount of dollars that I'm prepared to risk per trade. So each one of them are equally weighted at the same point in time. Then what I do is I use an ATR and a multiplier of that ATR to determine when my stop is. Now, what I'm doing there is I'm actually using my back test as a basis to identify what is the range of what I call the normal distribution and what is the range of what I call the non-normal distribution. And the stop is basically being placed where I think is what I'm calling the edge of chaos. This is where you start getting out of that normal distribution into material events, because what I want to do is give enough breathing room to allow maximum freedom of normal price movement, to give, if there is an outlier in play, to give as much freedom to move up and down before to allow that outlier its full possible extent. And what's driving that outlier is what we call serial correlation. And serial correlation is like an implied force or a momentum that you find that occurs in particular clusters along the trending series. There might be small periods of time where there's these momentum bursts in that trend that's giving it a degree of momentum. And then a bit later on, it acquiesces. And so this is where you need your wide stops to allow during the acquiescence phase a lot of freedom of price movement. Then we get another burst. It's very much like an earthquake that occurs in tremors in sequences. These serially correlated clusters, tend to occur in sort of sequences or clusters along the extent of the trend, which is giving it its directional bias. But there is a hell of a lot of price movement up and down between those points. You get that serial correlation. So the way I do it is I use an ensemble of trend following models, each with their own unique entry. So they're entering somewhere along that trend. They all have their own stop, ATR based multiplier applied, nice wide stops. And a trailing stop is also an ATR based trail with a multiplier applied. And that's what you call a chandelier exit. It's sort of moving in accordance with the overall direction of price, but giving it freedom to breathe. So when I'm using an ensemble of systems, the reason I'm doing that is I'm trading these outliers which occur in these tail regions. And in these tail regions, they're very unpredictable trends. So I just want to make a distinction here. Not all trends are the same. A lot of people capture trends which are actually part of trends of a mean reverting cycle. But they're not found in the tail regions of the distribution. They're found in the peaks of the distribution around the equilibrium. When you get that particular form of serial correlation, that's a negative serial correlation, and that's creating these trends within these mean reverting cycles. But because the mean reverting cycles are very large, people think that they're outliers, but they're just very natural mean reversion oscillations up, above and below an equilibrium. And there's a lot of trending behavior that occurs within that realm. I'm not interested in that realm. So I'm interested in the tail regions, which are the much more chaotic properties of trends, things that you can't apply rationale or reason to when you're riding these outliers. It's very much like the big surfboard rider on the massive wave. All he's trying to do is stay alive. He's not doing any silly tricks. He's not doing any sort of whipsaws, turning round and round and round 360s or whatever. All he's doing is hanging on for dear life and letting that wave take him. So out in these chaotic regions, I'm using an ensemble of models. So the way I liken this is, with we call them cyclones here, but you call them hurricanes over where you are. Now, when they do forecasts of hurricanes, you'll notice that they're using an ensemble forecasting method where they say, here is all the historical possible trajectories that this hurricane is going to take. And when they're applying this ensemble, they've got a big range of possible trajectories that hurricane can take. So it might hit Tampa, it might hit here, it might hit there. these ensembles are all different, effectively, systems which have occurred in the past. And then what they're doing as an ensemble is they're saying, what is the greatest probability of this ensemble striking a particular target? They're then looking at how those ensembles cluster or diverge away from each other. You can find it's almost impossible to predict things when they're diverging strongly all away from each other, all of these different possible trajectories. But you also can find there are some fairly more predictable trajectories. So that therefore means a weather forecaster can say with either a degree of certainty or maximum uncertainty, they either don't know where it's going to go or they do know where it's going to go. That's how I view this ensemble of trend following models. All of them cut losses short, loose pants, but I really don't know whether it's going to go here, there, whatever. I'm giving maximum possible trajectory of movement for that outlier so it can exhibit a whole different array of different chaotic flavors, if you like. But one of those, it's likely that a lot of those trend following systems are going to be knocked out, but some of them will stay on. And when you've got an ensemble of, say, 10 models, you've got a much greater chance of staying on the beast than a single model deployed out in this chaotic region. Because when you're applying a single model, it's inevitably over-optimized to a particular form of trend. It doesn't give maximum freedom for a variety of different trends. That's why I'm applying this ensemble. So if you can imagine, I'm trying to extract as much juice as I can out of that outlier, recognizing it's chaotic, it's turbulent, etc. But what I find is that when trends start going exponential, like cocoa, like Bitcoin, etc., when they start going exponential, all of my trend following models, that entire ensemble is progressively getting activated. And when they're on those exponential climbs, they're all committed to the trend. None of them have been knocked out during those phases. So they're all committed. And what that's doing is it's giving me leverage into that trend. It's a bit like pyramiding. It's sort of giving me extra juice when all of them are sort of surviving and going forward. So that's how I'm applying my models in this very chaotic frenzy, but every single one of them cut losses short. Now, when I say cut losses short, I've already mentioned to you how I have loose pants, etc. All I'm doing is I'm applying very small bets to each individual trade in terms of dollar commitment based on my unrealized equity. So if that's what I'm calling my small bets, and that's what I'm calling my small loss. I'm not calling my stop losses actually the small loss. It's the small bets that protect me during market extreme volatility. And you'll know there's been periods of time where markets move very fast and stops aren't observed. But it's the small bets. They're the things that will not compromise your portfolio result with a very large loss. The stop losses are there to what I call release risk steam from the portfolio. So if you can imagine, if I've got 67 markets trading with 10 systems, potentially, I'll never have all of them active at a point in time because, as you know, I'm waiting for these material trends to emerge before I participate in them. So like that surfboard rider out deep in the sea, waiting. I'm actually not committed in any trade. So a lot of the time, my portfolio has limited activity. When I start getting these material trends, suddenly I get active. And that's where my trend following systems all start clicking in. Some of them get whipsawed out. Some of them keep on. Now, what that does is, if you could imagine that that distribution of trade returns or the market distribution of returns where it's got the left and right tails, if you could imagine by me waiting until trends get material, I'm avoiding what you call the bulk of the distribution. I'm avoiding most of that distribution, the guts around the equilibrium. I'm only participating when things start getting material in nature, when a trend starts getting significant. That's when I'm participating. And that's actually when most predictive models are saying it's going to mean revert here, it's gone too far. That's when I'm actually jumping on board my surfboard onto that trade. They're going the other way. I'm going that way. I think it's going to diverge further. They're thinking it's going to come back. Now, if you can imagine, by only participating in those trades when they get material, what you'll find is that my trade distribution starts, it's a transform of the tail properties of the distribution. So it's not a transform of the entire distribution, it's a transform of the tail distribution. And that's why what I mean when I say a transformer, the tail distribution, you'll find that the properties of my trade results in my portfolio have these 5 to 10% extreme winners that might be, 100 R or 150 R or whatever. They might be holding for 2, 3, 4 years, because sometimes when these trends get significant, serial correlation endures. Serial correlation endures over time. So 5 to 10% of them are these extreme things, but the vast majority of them are just the frenzy of chaos. Whipsaw it out. Small loss, small loss, small loss, small loss, small win, small win, small win. I get about a 40% win rate. So, I might have 60% are losses, but they're all small losses. They're all, I'm trying to keep them 1 R or less. So 60% of them are all small losses. The 40%, only 5 to 10% of them are things that give me the real glory. But the rest, they basically pay for those losses that I've incurred. So if you can imagine, the 5 to 10% is my cream, and the 90% is basically the break even of going for these outliers, playing this game in chaos.
So I guess there's a bunch of questions for me. I guess one question I have to think of is, one, you say things that in such a way that makes me understand that you do so me being in extreme sports, you do understand surfing quite a bit, basically, like, to make an easy example, if you're at a contest and you do one of the biggest gaps in the park, and let's say or the dirt course, whatever you're on, and you're able to trick over that gap, usually, like, you could win the contest by doing something like that, for an example. So like you said, riding a big wave, you're not really trying to do anything insane. You're trying to just ride it and survive. And so when I started trading, there was a guy, this is years ago, I don't know if he still is even around and has a fund, Richard Dreiss.
Yes.
Okay.
Bill Dreiss.
Bill
Dreiss?
Yes, Bill Dreiss.
Dreiss Research Corporation.
Yes. It's the reason why it's AAO research for the fund and everything, because of that guy, actually. It's funny. I've never actually said that out loud, but I read, my uncle had an article of him in some technical analysis magazine, maybe. I'm not sure.
Fractal wave algorithm.
Yes. And he talked about his algorithm, and he talked about the fact that he, tried to create a Elliott wave system, and he found out there was no edge in this system. And so he ended up finding a way to, basically, his system was, you find a higher, it's the only pattern strategy I've ever heard of working, actually. You find a higher low, like, let's say, think of the COVID crash. The first higher low, the first higher low coming out of the COVID crash. So it crashes down, it goes up a little bit, and it comes back, and then goes up. And then when it makes a high out of that, you buy. And he could do this across all markets, all things. And, like, for me, that was, like, really, I was enticed by him because, he's a surfer. He's like, I think the article's called, actually, I remember it now, it's called Endless Summer. He lives in, I think he lived in Australia, and he would just surf all the time, and he would talk about it in trading. And I was like, this guy is awesome. And I'd follow his fund and everything he did. Like, I thought that guy was so cool. So interesting. The choppiness index he created too.
He had one of the best track records in the CTA space, and the good thing is he retired with his fund at a high water mark. So he just knew that this was the time to leave. At the high water mark, and it's a shame he's left the game, because I used to love Bill. And you're right, he was US based, but he did live a bit in West Australia, in Perth, and did a lot of surfing over there. Very mild-mannered bloke. When you listen to him, he's sort of got chooks in the background as he's talking to you about his fractal wave algorithm and his
and it's very interesting, because I'd listened to him a couple times, I'd follow his stuff, I found what he said to be so fascinating for me. Because for me, like, thinking of and it's biases we all have against ourselves when we're learning something. It's, you grow up. I grew up in a very not a very I went to probably one of the worst schools in Ohio. There's a lot of fighting, a lot of whatever. Most people would not want to go to that type of a school.
School of Hard Knocks.
Yeah, basically. I won't go too much further, but yeah, it was a rough school. And I grew up in a family that wasn't very educated when it came to finance or anything like that. So me getting here, I had a great uncle who was kind of outside the family who I hung out with later, but growing up and not really understanding any of those things was hard for me. And then I rode BMX bikes, and then you start to think, well, maybe I'm stupid, maybe that's why I do this crazy sport, and like you get those ideas in your head. And kind of seeing like what he did and the way he really thought about trading, and it really helped me to understand, well, maybe like I do have something different, because I
Yeah.
think generally what we do, especially athletes, I think we think we live so much for what we do. I had a friend speak the other day, and he said something about something, and somebody was like, yeah, I'm just happy to have a house at this point and all this stuff. And I'm watching my friend he's in the middle of being a professional athlete, and he says, oh, I'm trying to figure this out. And I say, this person here, I know exactly what you're feeling, where like when you're good at something, you would happily live in the middle of the street to be the best at it. So basically what I'm getting at is your whole life is based around getting better. And
Yeah.
so at this one thing, so you don't think you really have anything to offer the rest of the world in any other way. So thinking of it like seeing somebody who kind of like, just enjoyed surfing and was trading, like was really inspiring for me. And it got me really studying and reading, and like understanding charts and technicals, and then understanding price action, then learning systems, like he was a big inspiration for me. And most people like I talk to now, they tell me, you're the best read person I know. And I do. I read a lot of books. I went through a book a week for a long time. But at the same time, I didn't start out there.
Yeah.
I didn't read
Yeah.
any books. And then it was a point where I shifted my mindset, once again, and I started reading all the time. Had to start with audiobooks and then move to regular books and then move on from there. But he was a big inspiration. And so getting back to you, and I'm going on a rant about Richard or Bill Dries, but getting back to you, did you ever surf or do anything like that? Or do you just you go to the beach and watch people? Like where exactly do you get that? Because you really do understand it at a level that most people wouldn't.
Not sure, Jason. No, well, look, I did do tried some surfing, tried some skiing, that sort of stuff. Did a bit of skateboarding when I was a kid. But yeah, my sports, rowing. I did a bit of rowing, bit of cricket because over in Australia everyone plays cricket over here. And but yeah, no, I think it's just a case of I do love the environment, so I do spend a lot of time out in it, and I do like observing things in the environment, and it's interesting actually because I was in this area speaking with one of the indigenous people in this particular area, and he was taking me through his land, and he was showing me the associations between particular flowering blossoms and trout in a stream and all of this sort of thing. And that's where I took a lot of information from that about drawing associations from systems. Systems are always giving you clues. There's something happening here which might be causally connected to something happening over here, something over here. So I think it's just a case, as you said, Jess, I think wide reading really helps because that allows you to expand your mind and not just, you know, lean on the shoulders of giants, some really good writers out there, some people who know their stuff, rather than doing all the hard yards yourself. Try and learn from them, try and understand what they went through. So I spent a lot of time trying to learn some of the key physicists like Richard Feynman and people like that. And, just when you start getting into not just what they're teaching you, but how they're doing it, you start looking at the characters of the people we're dealing with. What's their nature? What's their characteristics? you start getting a lot of clues because, a lot of them are very chilled out people. Richard Feynman was probably one of the most chilled out physicists you could ever know. You'd see him on the street and he'd be a mate of yours. He'd have a few beers with you, that sort of thing. A lovely bloke, and just had this amazing knack simply because he was widely read, very widely read. Einstein, very widely read. When you start looking at all of these people, you realize, well, they're normal human beings, but they've got an enthusiasm for life. They've got an enthusiasm for their craft. That passion is what's driving them, and they're always learning. They're always learning. They never know anything. They're just always learning new things. And I think, stay inquisitive, stay curious, never assume that you know everything. Always be prepared to take on new ideas, understand things in a different way. And Jace, you'd know this. Often, when you and I sort of, we're almost now in the teaching game ourselves, where we're having podcasts and things like that. And what you'll find, I know you've probably found this, is that the teacher often learns better than the student, simply because when you've got to teach people ideas, you've obviously got to do it in different ways that they can understand. And what that forces you to do is think non-linearly, think from all different perspectives. And so once you do this from all different perspectives to teach something to all different minds, you're teaching them all different approaches or perspectives, you find that, there's a symmetry involved there. You often can find clues to bigger things simply because you're forced to look at things from lots of different angles. Doing that not only makes you a better teacher, but it also makes you learn more because you're forcing yourself to connect to things in different ways, see different patterns, see different arrangements, see things working differently. And it's always sort of, you're not getting locked into one idea. You're always keeping open. So I find that the more I teach is really to benefit me. The people who listen to me, they'll get a benefit from that. The real person who's getting all the joy and enjoying it is me, from doing it. How do you feel about that?
No, that's true. We only keep what we have by giving it away. I fully believe that, with every part of me, for sure. It was interesting. The other day, I had a conversation with a client, and he's seen my accounts, and we've talked a lot over the years, and he was like, why do you do this? And I was like, what do you mean? He was like, you're the go on Twitter, the podcast, like anything. And I was like, I generally enjoy it. I said, but also, and to your point, I said that there was a time when, and if you work for a big fund, there's some times where you can't post or talk about anything. And I went through that time a couple of three years ago now. And I felt very isolated. I was very depressed. I didn't understand why either. At the time, I really didn't know why. I was doing business wise, I was doing very well, better than I had my whole life. I was, about as high up as I could get in what we do. But I was miserable. I was absolutely miserable, and I wasn't, like you said, I wasn't teaching. I wasn't talking to people about ideas. I wasn't, having these types of conversations, because these type of conversations really, open my mind. And I think I've always generally been a teacher type, whether I was a kid and helping the other kids learn how to play basketball or something, or, I remember helping tutor special needs kids when I was in elementary school and stuff. And doing all those things, like, I got a lot of enjoyment out of them. And even as I got older and riding, like, I always had a group of kids who would follow me around, and I would teach them how to ride. And they would even some of them tried to dress like me, which was funny. I used to dress terribly. But, it's really, it's interesting, that point that you bring up, which is like, you learn so much from teaching it, but it's also because you're immersed in it. Like, once you're really immersed in it, and also what you brought up about all of the major minds, you know, they're very eclectic. You know, you talk to people and they think like how you get good at things is by just narrowing down your focus, doing this one thing. And really, like, I think, you know, the
Yeah,
people that
I differ to that opinion. Yeah.
yeah, and I think a lot of people have that opinion, but I think, like you said too, is like the more you're eclectic, the more you find this thing over here that might not make any sense to why it makes sense to trend following, like you're talking about, we're
Yeah.
talking about surfing.
Yeah.
Surfing, why would that make sense to trend following? Well, it completely does. Yeah,
Yeah.
I think everything's applicable. I think even the fact of, you know, the queen bee hibernating for the winter, you know, after, you know, losing all her family and she has to kind of start all over again. Like, I think that's applicable in another way, which is, you know, some people, as like you said earlier, trading is this thing where people think they always have to be doing something,
Yeah.
especially at
Well,
first.
interesting you say that, Jace, because
Mhm.
you know, I often talk about spiders' webs
Mhm.
and trend following being a spider's web. And what I mean there is that it's a different form of attack mechanism. So rather than a cheetah, which you know will be out in the savannah, running with this amazing speed to sort of mow down its prey, that's sort of what I'm regarding these predictive traders. They've got a target in sight. They've got their profit target set. They've got their straight trajectory. Bang, they're onto it and they get it. But a trend follower is more like setting these strategic traps with their process. So these traps are everywhere, just outside of the corridors. So it's avoiding the everyday normal machinations of the market. It's sort of just on the flanks of the major traffic corridors of all of the animals. But what happens when the strays, the small strays, sort of don't quite stick in the corridor? They go into these spiders' webs, these traps waiting to happen. And that's very much like our process. We've got this systematic algos that are patiently waiting all the time, a bit like a spider's web, waiting to snare something that's possibly many times larger than it can handle. You know, that's the spider's web. And you know, that sort of analogy really helps me because
Yeah.
it allows me to think of problem solving in different ways, thinking what's nature done? Because sure enough, you know, everything we've got from technology that we've got in this world today has stemmed from nature. You know, artificial intelligence comes from the brain, the understanding of how the brain works. You know, uh, the camouflage technology of the F1 fighter jets or whatever comes from the octopus, you know, with its
Mhm.
camouflage cloaking technology. You'll find that as clever as people think they are with these amazing innovations, they inevitably have their roots in nature because nature's worked this all out before. It's had eons to develop these incredibly, you know, majestic abilities. And you know, then humans come along and say, "Hey, I might pinch that idea. I might pinch that idea. I might pinch that idea." And really, that's what you've got to be in this world. Take clues from nature because you'll be able to pinch a lot of great ideas from it.
No, I love that. And you know, you same thing, like you watch a show like what's it called? Alone. Um
Yes, I
Alone
love
is
Alone.
Alone is a good one. Good, good. Yeah, you know, thinking about that show, you know, you watch who wins. Well, it's usually the outlier, you know, like it's
Yeah,
an outlier. It's not somebody who's getting you know, a rabbit a day, you know, like it's not
yeah.
the person doing that. It's the person who gets the deer. It's the person who, I think, who is the one guy stabbed what was it, an
A
elk with
moose,
a
muskox.
yes, a muskox
Muskox. He was a
with
bloke
a
who made
knife.
his rock hut. His
Yes.
rock hut. That's right. Yeah.
Yes. And so he
Amazing.
stabs it with a knife, and you're just like, what in the hell is this? You know, like, and at the same time, it's like that's exactly what we do. Exactly, like 100%. That's exactly all I do is I sit
Absolutely.
there and I wait for the outlier. And when the outlier happens, which it doesn't always happen, you're just like, oh, great, I can eat for the next year. You know,
Yes.
like that's all we're doing. So I think generally, like, this is a good conversation. I think people in trading, they don't really understand trend following to this extent. And I think that's the problem, is that so many people are kind of turned off to it. They don't really understand it. They see like you know, a 40-50% win rate, you know, even lower sometimes, and they're like, why would I run a system that you know, like they don't understand the big parts of this. And the big parts of it is the outliers part of this equation. You're not going to, and I don't care what type of trader you are, like you don't make good returns without those outliers. Like whatever it is, day trading, long-term trading, fundamental trading, you know, you're buying a stock, you're not buying a stock because you hope they all make 2% or 3%. You're buying it hoping there's one of them or two of them make a huge return. Think of venture capitalists. You know, I had a friend who was a venture capitalist guy, and he would always talk about, you know, what he's doing, and he'd be like, yeah, like I buy 10 companies and I hope one does really well, you know, and that's his win rate is 1 out of 10. And you know, that one might, you know, 10, 20, 100x, and the rest of them might go to 0. And you know, he says he diversifies the money enough so it's not, none of them can kill him. But you know, thinking about these small companies, you know, some of them you give $100,000 to, they could be worth, you know, millions in a few years. And so you really have to think of yourself as a trader looking for those same type of things, those same type of outliers. And when you find those outliers, then you got to figure out how you're going to hold on to them. And I think the coolest way to really really understand that is through crypto, because it's really one, everybody knows the chart. I can always talk about it. Everybody remembers what Bitcoin looks like for the most part. And when you're looking at Bitcoin, you see that there's these huge trends, and people go, well, I would just, yeah, Bitcoin in 2016, it went from, I think it was like $10 or $100 all the way to 17, 18,000. And people
Ride the
go, oh
bucking
yeah,
Bronco.
yes, yes. They go, I would just hold on to that and it would be super easy, you know? And it's like, no, one, like there's the aspect of when do you get out? Well, it looks like, for example, it looks really good when Bitcoin goes from $1,000 to $2,000 to say, okay, that was great, fun ride. I made 100%. But then it goes up a lot more. So you would have 17 extra money, you know, you could have 17 extra money instead of just getting 100%. So how do you hang on to those? Well, one, you have to have a system, because there's no way to just say like, hey, I've made a good amount of money, I'm going to get out, or hey, resistance is here, I'm going to get out. You have to figure out a way to put on that strategy and hang out with it. Like you said earlier, you know, understand the volatility of the product, using an ATR stop, keep making sure your stop loss isn't going to just chop you up. So you have to have it really wide. For me, I always call it catastrophic. I'm looking for a catastrophic stop loss. It's the only reason why my stop usually gets hit. My exit is what I'm trying to get to. My stop loss is just, one, it helps me risk manage. I understand my max loss point. Two, I can stay inside of trends, keep it very wide. And if it just did crash at some point, I would keep some of my gains. And then three, I'm always looking for that exit. So however you do that exit, a 50-day low, you know, bottom of Bollinger Band, whatever type of strategy you run, but you really have to understand how you stay in it, and then look at a chart and then back test it, make sure that would work over time. And then once you figure that out, maybe you figured out a way to hang out in some of these trends. But before that, you wouldn't. Like, for example, cocoa. I can't tell you how many people, you know, I have a bunch of analyst letters for commodities. I work with some farmers. So looking at the analyst letters, you know, that our cocoa was hitting resistance at some point all the way back, you know, last year, basically. You know, you're talking like it was when it went up probably like 20, 30% or something. And they're like, oh, it's done. You know, it's hitting resistance. This is it. You know, sell your positions, blah, blah, blah. And then it just goes higher, you know, and then it just kept going and going. There's no way to tell. There's no way to understand that. I wish I could. And that also brings to the other end. I talked about uncertainty, like you talked about the other day, in trend following, but it also works on the other end of things, where it's uncertainty when it stops is also another point. You know, you just can't know when something will stop. I wish you could. I wish I created a system for that. But I just don't know when something stops. I will never know.
Bottoms, you can't pick the tops. You just get the meat of the trend. That's just the nature of the game.
Yeah. So, Rich, I can let you go. I know it's late for you. Thank you so much for coming on. I could talk to you forever, but I know it's probably getting late for you, and I appreciate you help coming on late at night and just having this conversation. It was really great for me, very enlightening for me. I absolutely love talking to you. You're
Have
very
had a great time, Jason. Thank you very much.
cool. Well, thank you so much for coming on.
Alrighty.